Well, let's get an example of that because I did drag one stock idea out of you. ProPicks is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. So let's get into that now. I heard you talk about this name, but I'd love to get the thesis and then explain, I guess, how this is an example of sort of like the PICTON way, the PICTON philosophy. So the company is Rocket.
Yes.
So if you've heard of like Rocket Mortgages, so it's a stock that is a play on the housing market in the U.S. What brought you to that name?
First of all, a shout out to Capitalize for Kids. Incredible organizations, raised a lot of money for a very good cause. And at that, we generally highlight, a name or two in our portfolio, and we highlighted Rocket Mortgage. And it's a really good play on our overall investment process. So we are quantitative on one part of the book, and we are fundamental at the same time. We have a team of fundamental analysts and a team of quantitative analysts. They both go about their business looking for positive fundamental change. The analyst team will go and meet with companies, site visits, build their own models, and the quantitative teams will mine data sources. And if they're both looking for things that are changing for the better and they both overlap, we get really confident in a name. And Rocket is one of these names. So Rocket has had an incredible history of innovation. They were essentially one of the very first companies, they were the first company that allowed you to get a mortgage online. They were the first company that allowed you to do the entire process online. And so they've evolved to being a very big mortgage originator in the U.S. The housing market in the U.S. is about $5 trillion. The mortgage part of that is about $2 trillion. And the top 10 players in that mortgage origination space only have less than 25% market share. So there's a big potential consolidation play. So we came out of COVID, interest rates collapsed, the housing markets went crazy everywhere. We saw that in Canada, but you saw that through all kinds of different areas within the U.S. And it was heady times for Rocket.
Yeah.
And then we went through the exact opposite. We got into 2022, the Fed's hiking rates, long-term bond yields move up, inflation's here, and the mortgage origination space goes very quiet. Rocket did not go quiet, though. So Varun Krishna joined them from Intuit, and very much focused on using that quiet period of time to continue to build their capabilities. And they focused a ton of energy on AI. They're probably one of the very biggest and early users of AI in terms of impacting its business. So they have all this data that they collect, and they're able to kind of monetize that through AI. They also did a couple of big acquisitions. They bought a mortgage servicer. They bought Redfin, which allowed them to get access to online brokerage. And so when they did that, they ended up building a whole ecosystem now. They do mortgage origination. And in the US, they have this amazing feature that if rates go low, you can just go and refinance your mortgage. And you can get the savings directly. You pay a fee to do that. And you pay a fee to Rocket to do that. And then when you buy a house for the first time, you also might go to Rocket to do that. And now you've got Rocket servicing the mortgage too. So what we want to see happen here, and I think is going to happen, is that in each of the big digital areas of the United States, whether it's like e-commerce with Amazon, whether it's online brokerage with, say, Schwab, you get to critical mass, there's massive consolidation, and there's usually a few players left standing, and maybe sometimes only one. In the mortgage space, which is highly fragmented, we think Rocket's going to be that one. And so you can become the dominant player in a market that's been quiet, where you now have this flywheel of origination and service taking place, and your potential for positive change in your earnings growth profile is massive. And all they need is a little bit of tailwind from the bond market to get people refinancing.
Meaning the bond market.
Mortgage rates come down. People with higher mortgages refinance, and the whole flywheel kicks into gear.
You just told me you're a little worried about the...
I am. And
So how much does this go down if that doesn't happen?
There is risk in all housing related names. But the interesting thing is that while, say, some of the overall housing stocks have been down more recently, Rocket's actually been kind of perking its head up and actually trading at pretty heady levels relative to what's happening in the rest of the space. There's also the Trump administration, desperate for wins on all fronts when it comes to affordability, talking about different ways of trying to force rates lower or force housing affordability onto the marketplace. Should that occur, again, Rocket might provide you with an interesting exposure to that.
I think that's interesting because the housing market, you're right, has just been kind of stuck. And he is in really unprecedented ways trying to direct that beyond just bullying the central banker.
Yeah.
Directing Fannie and Freddie. Yeah.
Fannie and Freddie buying mortgage-backed securities.
Like that's unprecedented. Not just more, like $200 billion.
It's like quantitative easing for mortgages.
Yes.
Which is very interesting. And it's kind of worked. You've started to see mortgage rates sneak a little bit lower. There's a whole host of people that are now stuck in the U.S. with mortgages above 6%. There is an opportunity as rates move into the fives, hopefully, not saying they will, but if they do, there's a massive opportunity now for this refinancing wheel to kick into gear. And Rocket is very well poised for that. How
quick are you? So you did mention this name in October. That's when Capitalize for Kids was the conference that I was at. Love that conference too. How long are you typically in names? Like I think about hedge funds, I think about maybe high turnover, hedge fund hotels and things like that. Where does Rocket fit for you in terms of time horizon?
Our kind of belief is that when you see the first signs of positive change, the market doesn't necessarily pick up on all of them. Then you see the second kind of major signs of positive change. The market starts to understand. You see the third and the fourth signs of positive change. And usually these are around quarters when they report. That's when the market starts to understand. So our average holding period on many names can be 1, 2, 3, 5 years even. It's just that at the margin, you have names that kind of cycle in and out where your thesis doesn't play out, where the signals that you saw dissipate more quickly than you'd like. So a lot of the portfolio can turn over fairly quickly, and it can change as the environment's changing. You know, when, say, you're getting squeezed on your shorts, you might have to cover a short, you might sell a long on the other side. But when we have a thesis that we think we have an edge on, we want that in the portfolio for a couple of years to try and benefit from it.
And you mentioned AI as a theme and a driver of growth. We've kind of danced around it. Maybe this actually talks about how the AI trade isn't like it was a couple of years ago. But what is your view on the Mag 7? It sounds like, you know, you've said the other 493, it's their time to shine. It's not just about those 7 stocks. I'll ask you point blank, but are you willing to short those 7 stocks? Like, are you calling for big pain in that sector?
We have certainly reduced, and in fact, in some of our portfolios, again, depending on the beta exposure, we actually might be net short technology. And it's not that I don't think AI is real. Everyone knows it's real. It's not that we're not going to see the impact. You're starting to see the impact already of it. But the reality is that over the last couple of years, you just threw money at the AI trade and everything worked. And then we got to a point in time, and I think it was basically when OpenAI's CFO talked about the need for maybe government intervention and that we might be too big to fail. And then you start to look at the CDS spreads, the cost of insuring the debt of Oracle, and they spiked because Oracle has gone all in and has a massive amount of debt that they've never had before.
And big exposure to one client.
Yeah, one client in particular. And you start going, you know what, maybe this isn't just everyone wins. Maybe what's going to happen, just like it did in the internet, is that there's going to be a couple of champions, not multiple champions. And so maybe, and our belief is that this year you go from everything works to now a battle to see who the emerging winners are. And that you start to sort out some companies that maybe aren't going to be in this space versus others that are going to dominate the space. So you can still have some companies that absolutely win from AI and they become the leader and they could go up dramatically. NVIDIA is obviously one of them. They play with every kind of ecosystem in AI. They're a huge winner in this space. But maybe some of the direct players, most of them that are private, maybe it starts sorting itself out and not everyone's there. 5 to 10 years from now.
So that's interesting. You view a dip in some of these stocks, and we've been trained it's a buying opportunity.
Yep. It might be a buying opportunity in a couple. It may not be a broad-based buying opportunity.
And now there's no FOMO, because if I'm not buying Mag 7, it's going down. And my Russell small caps, that's been going up.
Yeah, I think they're like 10 days in a row they outperformed the NASDAQ here to start the year. There's something different that's occurring.
All right. And we really unpacked it with you today, David. It has been an absolute pleasure to get your insights. Thanks so much for joining me.
My pleasure, Amber. Thank you.